Hi, good morning, everyone. We'll just start in a couple of minutes. Yeah, good morning, all. So, welcome to one more session hosted by ICICI Direct. I welcome you all on this webinar, which is exclusively put for a set of customers that we all reached out to through various mediums. You would have got some WhatsApps, emails, notifications from our side. The intent is to spend the next 35-40 minutes in a very exciting way with all of you on this call. I am Arjun Upadhyay. I'm part of the ICICI Direct team. I manage the F&O business. And what we thought that as part of all the webinars that we do, this time we'll cover some key aspects that you and me as traders face on a daily basis in the markets, evolving around pricing and some of the key tools that we can use. So we thought that we will focus more around these topics. But before we start, just a quick, I thought we'll just share quickly what is happening in the industry over the last 6 to 12 months when it comes to F&O. And all of us are part of the industry, right? So we have been influenced by the news which is all around, has been all around us, and the various changes that have happened in the industry. So I'll just start with a quick summary of the markets. All of us know we have been actively involved in the markets. October 24 was a month wherein there were some circulars that came in from the regulator, and these were around expiry days getting restricted to both the exchanges for only one contract. Earlier, there were all the days in a week, all the calendar days in a week had expiries of their own. There was a mid cap Nifty, Fin Nifty, Bank Nifty, Nifty. We on the BSE side we had Sensex and Bank X, right? But post October, we got restricted on on NSE. We got restricted to Nifty 50, and on Sensex, BSE we got limited to Sensex. So six contracts overall became two. That was one big change that happened. And the second big change we are aware of happened was the lot sizes increased. So if I take an example of a Nifty, uh, the lot size increased from 25 quantity to 75, which meant that whether you are an option buyer or seller, you have to bring more margins on the table, right? And these were done with a very simple objective of putting the customer interest at the center, ensuring that there is safer participation on the F&O side in the Indian markets. And there were certain other guidelines that came in, like there was a 2% extra ELM that will be applicable to option sellers on expiry day, which meant effectively 20% more margins on the expiry day, and calendar spread benefits going away, and so on. And the latest changes that are happening in the industry, also what we are aware of, the expiry days again, I think they got shifted. Now NSE enjoys an expiry, Nifty expiry on Tuesday, and BSE enjoys a Sensex expiry on Thursday. What happened in the industry because of all of this from October 24 was obviously there was a dip in the volumes. So from October till March 25, the industry saw continuous dips in the volumes, derivative volumes. But the customers who were cautious, customers who were smart, they stayed in a hedged way, in a smart way in the markets. And by August 25, the industry did see a uptick again. Right. Specific to ICICI Direct, we always have we can boast of quality customers that we have with us, and our customers continues to stay active in the markets, right? But we've seen as an industry, we've seen an uptick from March, which was a dip, now to August 25, right? So that is, I just thought before we start, we'll just do a quick summary of the last 9 months, 6 months on the F&O markets. So with that, now I'll actually bring up my screen. And the first topic we really wanted to cover with all of you today was that when we are in markets, obviously we have strategies up our sleeves, or we rely on research recommendations, we rely on predefined templates that most of the brokers give. But one thing always keeps in our mind: what is the pricing? What is the cost of the trade that I will get into? Right. So we thought that we will spend more time there. We will address the main question that how, as an F&O trader, even I optimize my pricings, right? What are the tools to optimize pricing when it comes to F&O trades? So there are two components to it. One is when I bring in the margins, and there is a brokerage. So there is a cost of bringing in cash. We all understand. If I'm putting monies into a trade, that trade gives me X return. But if that X return is lesser than the rate of an FD, right? So opportunity loss hota hai. And similarly, if I'm pledging my shares to create margins, there are opportunities involved there. Obviously, there is a brokerage to my transaction. And then there are statutory charges that we all know of. There are STTs, stamp duties, right, which apply to us. So when it comes to pricing, we all want to decodify it. We all want to understand what is the cost of a trade effectively when we are in F&O market. So let's discuss that at length. And please keep sending your questions in the chat. We'll answer each and every question, right? So with that, we'll just start the actual conversations around optimizing pricing. And obviously, we'll make a reference to our platform, ICICI Direct platform. Yeah. So most of you would have seen the screen. Now this is a screen where even before I've put the first trade, I want to bring in my margins. Now before we start, the customer can bring in margins for F&O trades only in two forms. Either they bring in cash or they pledge shares as margin. These are the only two ways you can set up your margins. So I'll start with the cash customer first because that's the most easiest, right? Most of the customers bring in cash for trades. So this is the screen on the ICICI Direct platform. The way you reach here is you click on F&O, you click on funds, and you see allocate funds. Now, what happens on the screen is pretty self-explanatory. You can see your total bank balance. Now, the beauty of ICICI Direct platform, and most of us on the call here have 3-in-1 accounts, right? Is that your DMAT, when you set up your 3-in-1 account, your DMAT and your savings bank account is set up with the bank, and a trading account is opened at ISEC. And all these three happen seamlessly. So the platform, the way we have built the platform, the moment you come on the screen, which is ICICI Direct screen, you can see your total bank balance, right? This is real time fresh from ICICI Bank. And there are segments that you can see in the lower half of the screen. Now, if I want to allocate, if I see a wonderful opportunity in the FNO in the markets, and I say that okay, I want to go say short on the market, long on the market, whatever, and I immediately want to bring in funds. So you can see futures and options as a segment here. Now, assume I want to bring 1 lakh rupees for an immediate trading opportunity. All I do is I type 1 lakh rupees, and I request all of you to just keep your eyes glued to this part of the screen where the existing allocation is visible. And when I click on submit, so this is a testing account, say 80,000 rupees, and you guys can focus here. When I click on submit, my money is immediately allocated. It took a second max to have the money allocated to FNO. Uh, and if I have to take the funds back to my bank account, it's the same process. I'll just click on reduce. I'll say, please move 50,000. And that's it. The money is back into my ICICI bank account. Now, the reason we wanted to start with the screen is we have to be very mindful of the fact that when I'm doing this, when I'm allocating my funds in the ICICI Direct platform for say FNO, those funds are as of now not deployed in trades. They're just allocated. Uh, so what happens to these funds? Do I cease to earn interest or do I still continue to get interest? Because if this money was in my ICICI bank account, I definitely would have earned an interest of say 2.5% on my savings bank account. So let me tell you, your money which I just allocated will continue to earn interest of 2.5% unless until I deploy this money in a trade. And the moment I say square off my positions and the money is back into my allocation trading account allocation, I again immediately from that very second continue to earn interest. So if I have to draw a parallel with some of the brokers, most of the brokers out there in the markets, which operate on the philosophy of pool accounts, there when you transfer funds from your bank to the broker's pool account, the broker actually earns interest on that money. Here in ICICI Direct, since we have a 3-in-1 account, the interest stays with you. So this is one key call out for people who bring cash as margins in FNO segment. I'll just take one more second and tell you how important this is. And I hope my screen is visible. I've just shared an Excel. Yeah. So let's say I am a trader, I trade in FNO and I have 5 lakhs of a margin, right? I bring in 5 lakhs of a margin. We all know that in 365 days in a calendar year, there are only approximately 250 days which are trading days. Now, I also, in all my capacity, I'm not invested in markets for all the 250 days. Yeah, right. There'll be days when the markets will be not aligned to the strategies I want to be in. The markets will move sideways, and I want to be out of it, or I'm busy in my own work and I could not put a trade in time. Right. So let's assume that out of 250 trading days that I have as an opportunity in a year, I stay invested in markets for 100 days. Right. The other way of looking at it is I brought in 5 lakh of cash to stay ready for my FNO trades, and my funds idle time is 265 days. Why? Because 100 days I was in the markets, and 265 days, the remaining days, my funds are actually lying in my pool account. In this case, ICICI's trading account. Now, on those 265 days, the 5 lakh rupees will absolutely earn interest for me in ICICI Direct. And if you see at the numbers, the last row, this money would have earned approximately 9,000 rupees for you, right? And this is a very conservative assumption on the least amount of interest that we have taken for calculation. But just to give you a sense, it corresponds to 1.8%, approximately 2% of my margins. We all know we struggle in the markets for a return of 15%. Sometimes we do 20, sometimes we do 10, right? We all want to beat the markets. But before even starting, the call out here is that if you're bringing cash as margin as an FNO trader, because of the structure that you get with 3-in-1 account at ICICI Securities, you already are at an advantage of 1.5-2%. So this is a big game changer if you ask us. So that's on the cash margins, which was pretty simple. Now the only second way in which we can set up margins is you can leverage your demat holdings or shares, right? Most of us are there for the long time in the markets, and we've got our holdings in our demats, right? Is there a way that I can leverage that? When I say leverage, yes, there is an element of leverage involved in this. But if I consciously want to do, are there tools that enable me to pledge my shares and create margins in the market, right? So yes, there are. Most of us know there are tools. But how easy it is to pledge a share, and what are the benefits once I pledge a share? Are there any benefits that I get, right? So in the second part, let's cover that. So to start with, let's see that what is the denominator, right? So say for example, this is for demo purpose, this is just a screen that I've brought up. So this account holds so many securities, right? So many scripts. These are my demat holdings, say for example. Now assuming I want to just pledge some of my holdings, I want to pledge 10 quantity of say Aadhaar. I want to pledge say 10 quantity of Larsen to Bro, right? And then here also, if you see, you have the opportunity of pledging it for stocks. So whatever margin gets created, that margin can be used for stocks or for FNO segment. So in this case, obviously we'll go for a pledge for FNO. And when I go on the next screen, you can see what is the margin I'm getting. I'm getting 32,000 rupees of margin for these 20 stocks that I have pledged, right? If I confirm, this will seamlessly redirect me for an OTP at the NSDL website. And there I give an OTP and immediately you get the margins created in against your account. The other way of looking at it is when I was on the allocate funds, intuitively ICICI Securities will tell you that the shares that you hold, what is the maximum that you can create as a limit. So if you see, I've just highlighted this for you. Against this account, for demo purpose, I can create 43 lakhs 25,000 worth of margins by pledging all the shares that we have, right? So this gives you an indication. So yes, can I pledge my shares? Absolutely yes. Can I pledge it digitally? Absolutely yes. How much time does it take? It takes under 2 minutes. Now, the second question that most of us ask is uh, the starting point, and we do benchmark the industry very closely. What is the universe of shares? See, all the shares we cannot pledge, right? Obviously, every broker will have a risk management system, and every broker will have some comfort around the various shares which are out there. But let me tell you, ICICI Securities has 1,400 plus shares that you can pledge, and this is one of the longest share list that you can get in the markets. Right. So my starting point is one of the longest shares. Then I just go back to shares as margin and I come back to the screen of stock list. Right. Now here you can again see I'll just pick up one of the holdings that we have, say Asian Paints. So yes, Asian Paints is allowed to be pledged. Now, if you see here, there is something called as an haircut, right? 9% haircut. Now, what does this mean? This means that if I've got 100 rupees worth of Asian Paints, and if I pledge all that 100 rupees, I will get 91 rupees of margin. 9 rupees will be the haircut, right? Why does this happen? Most of us know, but I'm just calling it out. Obviously, every broker will see the value against any share that I pledge. And since we are in markets, tomorrow there is a risk that the value fluctuates, right? It goes up or it goes down. Now, if it goes down and I've pledged something worth rupees 100 and my broker gives me margins worth rupees 100, right? The broker might take a risk. So sometimes there is a haircut. In fact, all the times there is a haircut that is put on the stocks, and it is a function of how does the broking house see that stock as, in what category that is, does it qualify. So you can see there are cat A stocks where you can get up to 91% types of haircut. There are ETFs where we give 94% margins. There are category A stocks where we will give up to 90% of funding. There will be some stocks where there will be larger haircuts like 20-30%. But one thing you have to be very mindful when you're pledging your shares, what is the haircut that the broking platform is putting? Now, what does ISEC put? So if you, and this is all available on the website, if you come on our website, across the 1400 stocks that you can pledge, which we discussed, our average haircut would stand around between 18 to 20%, right? Which again is pretty aggressive. And this is visible on the login page. So these are two elements before we come to the actual pricing on shares as margin and what a trader should look at. One is what is the stock list that I can pledge, the flexibility that the broker platform gives me, and what is the haircut against that stock. Now, with these two things sorted, if I go ahead and if I pledge my shares, now what are the pricing elements that come into play? So I've brought up my Excel, and this is a very simple Excel which actually we built for this webinar. Now, assuming there is a customer who wants to enter the markets and he wants to deploy a margin of 10 lakh rupees, assuming, right? Or rather, he has holdings worth of 10 lakh rupees which he wants to pledge. So the shares value that he has pledged is 10 lakhs. Assuming the limits, the haircut on those shares is 15%. So obviously 15%, 85% of that money comes to me as a margin. So I get a margin of 8.5 lakh rupees, right? Now, what are the costs? So typically, and we'll take a pause over here. Now, typically in the markets, when you do shares as margin, what is asked is 50% of that margin you have to bring in as cash, right? Most of the brokers do this. 50% of the margin has to be brought in terms of cash, and 50% can be continued in terms of shares. If you don't bring in cash, then obviously some of the brokers charge you an interest, right? There are practices of charging you an interest on the cash component that you have not brought in. So hypothetically, on this example, if 8.5 lakh rupees is what the margin is, you have to bring 4,25,000 rupees as cash, so that the other 4,25,000 of shares, there is no interest charged on it, right? If you bring the entire 8.5 lakh rupees as shares, brokers will tend to charge you interest on the 4.25 lakh rupees, and these interests vary according to different brokers. So with that as the base, what does ICICI Direct offer to the customers? So our proposition on SAM is one of the strongest. Our proposition on SAM is that we will not take any cash from the customer. We actually put in the cash on behalf of the customer with the exchanges. So in the same example where you wanted to get into a trade of 8.5 lakh rupees, the cash that is needed from you is zero. So that cash then remains with you, right? And we'll come to the opportunity of that cash. So then do we charge interest on the shares that you have pledged? Again, the answer is zero. Under our plans that we have, like a Prime 9999 plan, we charge 0% interest, right? So with these two things settled, and I repeat, no cash and no interest on shares as margin, what do we then charge as a broking house? So assuming a person of this capacity in the example who's bringing in 10 lakhs of pledging 10 lakhs of shares and bringing a margin of 8.5 lakhs, how many lots would he be trading? So I'm saying assume he trades say 10 lots in a day or 5 lots in a day, more practically, right? 5 lots in a day. And he buys 5 lots and he sells 5 lots. So say 10 lots. So in a year of say 150 trading days, when he's active out of 240 trading days is an assumption, he is buying and selling 1500 lots. Now the pricing on shares as margin in one of rupees per lot, but there is zero cash that you have to bring in and zero shares as margin interest. The total annual cost against rupees 9 per lot against the 1500 lots that I've bought and sold is 13,500. This is my total brokerage that I would have to pay to ICICI Direct in this example as brokerage for staying in the markets, right? But what did I save? So if we go back to the illustration, we saved 4.25 lakh rupees, right? Now that 4.25 lakh rupees as cash, which other brokers would have taken, is now with me in my bank account. And if I'm a smart investor, I'm saying, say, Nifty CAGR for the last 10 years is 11.69%. I say the markets will make 11% for me. That's what I desire out of the market. So that cash of 4.25 lakh rupees, I can assume that at 11%, that will work for me, which comes to 46,750. So my opportunity money saved, the actual money I saved by having my cash with me against the brokerage I paid to ISEC, you can see the benefit. I got 33,000 rupees benefited, and this is compared to all other brokers in the market, right? And this is not more of a comparison; it's in general a call out. And that 33,000 to 10 lakhs is 3.3%, right? So, and let me do this for you. Yeah, so it comes to roughly 3.3%. So this is the benefit. This is the power that comes to you when your cash is unlocked, and against the shares, there's no interest charged to you. So to summarize, what did we discuss as an FNO trader? What is the cost? What are the costs that we carry into the markets? Obviously, brokerage is the biggest component. On brokerage, if I'm a cash customer, um, uh, my heads up when I'm in ICICI Direct platform is 1.8%, 1.5 to 2% saved because of the underlying account continuing to earn savings rate interest. If I'm a shares as margin customer, because I don't have to bring in cash and my shares as margin is not charged, there's no interest. Around 3 to 3.5% is what I save, right? And these are very important numbers. And there is no other combination. So irrespective whether I bring in my cash, my margins as cash or shares, there is a head start that I get on the platform, right? So this was on the brokerage side. With that, we will just quickly shift to what are the other elements when it comes to cost impact in the market. So quickly covering, we would all know that since we are all active traders, there are some statutory charges like STTs, right, which is 0.1% of the premium, and it's applicable to option sellers. There are exchange transaction charges of 0.035%. There'll be SEBI turnover charge, there'll be a stamp duty charge, GST charge, depending on whether I'm buying an option, selling an option, whether I'm doing futures, right? But these also are an important component on pricing. And as a tool, we've got something built on our non-logged in section, which you can refer to, and you can get all these charges before you put in your first trade. But yes, brokerage happens to be one of the key things. Then there are these statutory charges. And then there are certain untangible things which usually are a cost when you actually do a trade in the markets. So let's discuss that. So I myself, I'll take an example. When I'm in the markets, I would have a view, but I would always rely on a research house, right? If there's a research house where there are RAs sitting and they're giving their own research outputs, and is that accessible free of cost on the ICICI Direct platform? If yes, to a FNO trader, how valuable it is and how has it performed? So let's quickly spend the next 5 minutes there. So when you come on on the ICICI Direct platform under the FNO section, you can go to research. Yeah, under research, there is a section of investment ideas and trading ideas. I would recommend all of you to go through the investment ideas too, because calls like Gladiator, they perform exceptionally well for us. But as of now, we're covering trading. So under trading ideas, you can see that whether you are an option buyer or seller, or you want to see all the recommendations that are coming in. And then there is a filter of futures, options, right? So for now, say for example, I choose options. So there is a live call, right, which is out there in the market. Now this is on a particular contract, but look at this. There's a recommendation price, the current market price. There's a target that the research team gives. There's a stop loss defined. And most of the times when the market moves, you will see that there are interim calls also that can be placed to you. You can say if there's a part, you can book your profits partly 50%, or you can exit the call totally. All of that will continue to come here. And just in case if I'm on the move and I want all these research calls to hit my WhatsApp, I can seamlessly go on the settings section. And from here, I can manage I can apply for subscriptions, WhatsApp subscriptions, and I can say, okay, I want research calls on my WhatsApp while I'm on the go, right? But for now, let's come back to the research section. So let's see futures. Now these are all calls which are open at on futures, right? We can see there are two calls, one which has hit a stop loss. There's one where it has gone profitable for the customers, and there is a call which has come at 11:48, just 8 minutes back. That book full profit, right? Now, we all are there in the markets, and obviously we know research has an accuracy rate, and you can find these numbers on their app. Our FNO research reports, which come from a research house, these have a hit rate of a strike rate of 70%, 70, right? So, and which is huge. So 70% is a strike rate on FNO reports. And are these charged? No, they're absolutely not charged. Even on the investment side and on the FNO side, whatever research reports you consume as a retail customer, none of these are charged. Yeah. So that was on the research. What else? So say, for example, now I have a strategy of my own, or I wanted to rely on a research recommendation. I have that also at my fingertips, free of cost. I just am a view of the market that the market will go bullish from here, bearish from here. It will stay neutral. Do I have some tools? Yes, I do. I can go to smart tools in FNO. I can go to predefined strategies, right? And 80% of the ecosystem is covered on the retail side in these strategies, right? Some variations of these strategies. I say the market should stay neutral, say for example, or bearish, right? I can pick up any of these strategies in one click, and then I can place an order from there. So this is again all that we are covering right now is not charged for any of our retail customers. It's all free of cost. The next thing which is very valued by large investors and retail investors, and this is the question we keep on getting, is when I'm there in the markets as a young trader, new trader, or I have been there for some time, I would always love to backtest the strategies that we have, right? Which is a very important component. Even if there's a research call and I want to backtest it, can I do that or not? Right? I still want to backtest it if there's a research call, if there's a predefined template, or I've got strategies of my own. Can I do that research backtest? The only thing that you would need for a backtesting would be data, right? That's the most critical thing. And if I could get, say, 3 years of historic data, if I could get 3 years of historic data second by second, right? All of these are crucial questions. So on the ICICI Direct platform, again, when I'm a smart trader and I'm talking of my costs involved of being there in the market, the intelligence I'm getting out there in the market, the research, backtesting are two most important components. So research we covered. Now on backtesting, if I have to explore something on backtesting, is there something? Okay, let's see. So we are on FNO. We go to Smart Tools section. Under Smart Tools section, there is a backtester option. Now, if I click on this backtester option, I'm taken to this page where if I want to create a strategy, I can create a strategy. Just in interest of time, I'll show you something I've already created, right? And we'll come back to this screen, which is visible to you. This is again a very interesting screen on all the algos, pre-published algos that ISEC gives. But we'll be back on the screen in a second. First, let me take you to a screen where I've already created some strategies, right? So these are some strategies that I've already created in the past. Now I'll pick one randomly and let's see what I have created. So this is a at the money call that I'm selling and a OTM 2 strike put that I'm selling, right? And I'm saying my entry strategy parameters are 9:20 in the morning and I want to exit intraday. If I wanted, I could have kept triggers around stop loss and take profit, but I have not. Now, whether this strategy in the Indian markets, say on a Nifty contract, would have worked in the last 6 months is what I want to know, right? So I can hit a button called backtest here. And I can put in a starting range of data. So say, for example, I want to see for the last 6 months. So I go to 1st September and say end date is this, and I deployed 5 lakhs rupees. I did two lots of underwriting, 2 lots of writing, and I hit the quick backtest. Now, while this happens, let me tell you what actually happens in the backend. This data now is running, my strategy is running on the specified start date and end date, tick by tick data, historic data, which is saved at ISEC ecosystem. And now it will start giving me what would have been my returns, right? and it would also benchmark it against the Nifty, the standard Nifty 50 returns. So I can see how my strategy has performed, was what was the Sharpe of the strategy, was what was the drawdown, right? And the returns will start getting plotted on the screen. So, and this takes usually 2 to 3 minutes, depending on the time frame that I have given to the system as an instruction. So while this is happening, let me just quickly bring you to this screen. So I had pre-done this strategy. Now the input parameters are the same. So this gave me a return of say 8.62%. And I can see the Sharpie was 0.87 and drawdown was minus 7.67. So fortunately for me, the strategy looks good. But the exciting part is, had the strategy not worked for me, I could have modified it in smartly, right? I could have rerun it. What will eventually happen in the markets, we all know, right? Is known to none. But at least I can backtest and see the solidness of the strategy that I have, right? So this is one tool. Again, let me reinstate. It's historic data, free of cost, second by second, that's accessible to all our retail customers, right? Um, Going back to the screen that we just tangentially saw, which was around the algo. Yeah. So this is the screen where we started from. So again, this is one question that comes to us time and again, that while ICICI Direct has one of the largest research houses and the most awarded, are there strategies, algorithmic trading strategies, which ICICI Direct's research house has itself built, back tested over the last so many time frames, then got it stamped with NSE BSE in the compliant way. Then the business teams tested, and then those strategies were placed for our retail users. Is there a proposition? Yes, there is. And again, this is again a very important component where nothing of this that we are going to demo is charged. Now, if I, as a customer, if I'm a beginner in the markets or I'm a seasoned trader, irrespective, if I just come on the screen under FNO, I'll just redo it, smart tools, algorithmic trading, right?
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.
Yeah, I think there was some technical glitch. Apologies for that. I think we are back on the call. So I'll just bring up my screen again. Yes, so here we were. So this is a screen where you can see all the strategies. So just to repeat, these are all strategies published by a research house and backtested thoroughly. Now, assuming I'm a retail trader and I come on the strategy and I just pick one of these, which is, and these are all intraday strategies, let me tell you, say Nifty long only strategy, right? And all I have to do is I just go on no more. And this is what comes. Now, as a retail customer, I just have to read through the strategy parameters. And if I can relate to the strategy, associate with the strategy in the given way the markets are going. And if I think the strategy makes sense, all I have to do is just press a button. And then what happens in the backend is all algo, which is taken care of. So for example, this strategy is a simple strategy which works on weekly expiry of options, and this will always trigger a position for you when the markets are in momentum. So assuming the markets are going up, it will buy a call for you. It will hedge at the same time, it will smartly hedge your call position against a put. There will be predefined stop losses which will be baked into each of the trades. If the markets continue to be bullish for some time, the put leg will be squared off so that you can maximize on your call profit. If the market takes a U-turn against your strategy, it will square off those positions with the stop losses. It will create new put position now hedged against a call. So all of this, while it sounds very complicated, but believe you me, this is all coming out from a RA desk, and the beauty of it is that you don't have to manage your trades. If you associate with the strategy in a click, you can just put the trade, and then the system will continue placing trades for you. Also, as a disclosure, all the strategies will tell you exactly what's happening. So in this particular example, not more than 20 positions will be created for you in a day. All of these will be intraday. The timings of entry and exit are mentioned, right? The underlines are mentioned. This particular strategy works only on Nifty. So the lot sizes will be in your control. So assuming I want to go ahead with this momentum based strategy, I will just click on trade. All I have to do on the screen is enter the lot size. So I say one lot is okay. There is an indication that you should ideally maintain 1,80,000. This is just a indicative number. And then I click on trade. I'm immediately into the transaction. Now the algo will keep on running. I can see my orders that are placed in the open position. I can see the squared off orders under the order book also, right? In under Yeah. So this is one. Second, on the same under the same portfolio, so that this is one example. Now that someone wants to leverage expiry days, take a theta strategy. There is a theta strategy that we have, right, which works on theta decay. Someone wants to have an underlying as bank Nifty, we have that variations also, right? uh, so there are so many strategies, and the team is working on bringing in BSC strategies on BSC also. All of these right now that you see are on NSE underlyings. I just wanted to call out one more strategy, which is now white box. White box is where the customer has the power of putting his own parameters. So this is one interesting strategy, and we'll just spend 2 minutes here. So assuming I want to buy a put of 24,750, just as an example. Uh, so I just typed the contract, and now I'm saying I'll put some numbers here, and then I'll explain what the numbers mean. So I put a max loss of say 5,000 rupees, max profit of 10,000. I'm saying when profit reaches 2,500, lock my profit and trail at 2,000. Now, what does this mean? So when derivatives markets are volatile, right? We all know. So when I'm in the market and I'm not, I don't have time enough to stay on the screen at all times. But I am pretty sure that I want to enter on this contract and buy a put, right? I just did that. I entered these four parameters and I clicked on trade. What now this algo will do for me is whenever my loss hits 5,000, obviously my position, I'll exit the trade, right? Whenever I hit my target profits, max profit of 10,000, I'll exit the trade. But what all of us are anxious about is the opportunity loss in the market. So say for example, when I entered the market, the markets were favoring my strategy and my PNL started going up, right? And then the markets took a U-turn and the PNL started coming down. Now when I see the amount that I opportunity loss that I did on when I was in the money, right? When I was in the profit, if I have to say, that really hurts. So what happens here is, since I've defined a limit that when profit reaches 2,500, lock my profit at 2000. So if I was making money on the strategy and my PNL was 2500 at particular point in time, and the markets took a U-turn, and then I started making losses, that time it will ensure that at least 2000 rupees is locked as profit, right? Now, if the markets continue to go up and the profit reach, say, instead of 2500, a multiple of 2500, say 5000 rupees, and then the market took a U-turn, my lock profit would have trailed twice. It would have automatically become 4,000. Similarly, if the markets went up and my PNL was 7,500, and from there it took a U-turn, my lock profit would have become 6,000, right? So this is one algo where in one instruction, I can take care of a trailing profit and a trailing stop loss, right? So yeah, so with that, I think I'll move to the last component, and then we'll summarize on the pricing bit. Is the heart of trading, which we all love, is watch list, right? Now, when we are trading in the markets, we would like to see the charts. We would like to put some indicators on the charts, right? So assuming this is a Nifty that I've opened, and what I personally do is I want to put a relative strength index indicator here, overlay it with a Bollinger, right? And maybe have a look at the crossover, right? So what I did is I just planted three indicators on my chart seamlessly, and all of these indicators are free of cost. If I want to put in say two more indicators from here, I can do that as well. Now, and this chart is powered by TradingView at the back end. Now, most of these indicators, when you go outside in the markets, beyond two, beyond three, there are subscription charges that platforms ask you, right? The reason we are covering this component under the pricing discussion is that these are all benefits that you continue to get on the ICICI Direct platform, which are not charged, right? So, and I can go on and on, but in interest of time, I'll just now summarize. So we just discussed pricing. We said there are customers bringing in cash margins, there are customers bringing in shares. There were benefits that we discussed, and then the untangible benefits of research, free backtesting, indicators on the charts, right? Free algos, research backed, white box algos, which I can all modify. All of this is available to you on the ICICI Direct platform. And the last component around this is some of the tech savvy, retail tech savvy traders, which we have. And we've got a large community of tech savvy traders who are API traders, right? They want the broker to expose their set of APIs, and they have their own codes and their own algo setting from where they fire transactions and they place the transactions to exchange via the broker API. Those APIs also, we have got one of the best stack of APIs in house, and that is also free of charge. All you pay is the brokerage, and there the historical data also is available to you to backtest your strategies. So in all, we just wanted to take this session with you, and thank you all for joining in. We will take a few questions if there is time, and we'll continue to answer on the chat group. But thank you so much. This was one request we had got from all our customers that please cover pricing, and we thought of doing this. Feedbacks are most welcome, and we can do one more session of pricing if we want to go in details on a particular topic. If some of you want us to cover something in details, we'll absolutely cover it in the coming sessions. Thank you so much, and have a good day. Thank you all.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.